You're not rich yet because nobody ever truly taught you the invisible game that powerful market makers play behind the scenes. They constantly control the flow, subtly manipulate prices, and consistently profit from your every single mistake. But you can learn their secrets. Every single time you place a trade in the market, you are directly interacting with a powerful, often unseen entity, the market maker. Their primary, crucial role is to provide essential liquidity, ensuring there's always a readily available buyer for every seller, and vice versa. Without these vital market makers, financial markets would quickly become chaotic, experiencing huge price gaps and making trades difficult to execute. Market makers fundamentally don't care if the asset's price goes up or down, their consistent profit comes from the bid-ask spread. The bid is always the highest price a willing buyer is prepared to pay, while the ask is the lowest price a seller will accept. The small but guaranteed difference between these two crucial prices represents their consistent profit margin on every single transaction they facilitate. They constantly and dynamically adjust these prices, skillfully creating a constantly shifting environment where they always maintain a significant edge. Understanding the order book is absolutely key. It's essentially a real-time, transparent list of all pending buy and sell orders for a specific asset. Market makers strategically place large orders on both sides of the book, creating the illusion of deep liquidity exactly where they desire it. They can even spoof the order book, placing massive orders they never intend to fill, solely to manipulate the price direction. This deceptive tactic tricks unsuspecting retail traders into believing there's strong buying or selling pressure, often leading them directly into traps. One of their most notorious and frequently employed tactics against retail traders is widely known as stop-loss hunting. They precisely know where many retail traders instinctively place their stop-loss orders, typically at obvious, easily identifiable support or resistance levels. Market makers will then intentionally drive the price directly to these specific levels, triggering those stops and profiting immensely from it. This action often creates a powerful chain reaction, pushing the price even further in their strategically desired direction, amplifying their gains. They then abruptly reverse course, leaving retail traders with significant losses, while they themselves walk away with substantial profits. This fundamental difference highlights the core distinction between sophisticated smart money and often disadvantaged retail money. Smart money, typically comprising large institutions and powerful hedge funds, possesses superior information, advanced technology, and vast capital resources. Retail traders, on the other hand, frequently trade based on raw emotions, breaking news headlines, or overly simplistic technical indicators. To effectively counter this inherent disadvantage, you absolutely need to learn to read the market maker's true intentions, not just simple price action. Volume is your very first, crucial clue. Unusually high volume at key price levels can strongly signal market maker activity. Look for clear price rejection immediately after a suspected stop-loss hunt. If price quickly reverses, it was highly likely a trap. Pay very close attention to the time and sales window, often referred to as the tape. It clearly shows all executed trades. Large block orders, especially when they appear at critical price points, can strongly indicate significant institutional participation in the market. Look for distinct imbalances in buying or selling pressure that simply do not match the immediate, visible price movement on your chart. This often strongly suggests that market makers are actively absorbing orders, strategically preparing for a significant move in the opposite direction. Always, without exception, use proper risk management. Never risk more than a very small percentage of your capital on any single trade. Market makers consistently thrive on predictable retail behavior. Therefore, you must be unpredictable. Think like them, not against their strategies. By truly understanding their sophisticated strategies, you can effectively avoid becoming their prey and even learn to ride their powerful coattails. The market isn't truly rigged if you genuinely know the fundamental rules of the game. Now you have a crucial glimpse behind the curtain. Use this invaluable knowledge to diligently protect your hard-earned capital and approach the financial markets with newfound clarity and unwavering confidence.